I'm here once again with Nick from Simple Property Investment. Nick, NRAS properties, can you tell us what is an NRAS property and what does it actually mean?
Sure. NRAS stands for National Rental Affordability Scheme. It's a government-backed program to increase the access to affordable rental property for low to middle income earners.
Okay.
The long and the short of it is that as an investor, you buy a pre-approved property that has an NRAS licence attached. You would agree to discount your rent by 20 to 25% to the current market rent valuation. So you're receiving less rental income on a weekly basis. You still have the normal running costs of the property, but in return, the government tops you up by, this year it's $9,981 as a tax-free incentive. It's done on an annual basis.
That sounds great. So although you're reducing the rent slightly, which would be offset against, which would be tax deduction anyway, you also get the benefit of the one-off payment at the end of the year. And how long does that payment go for?
It's paid every year for 10 years. It's also increasing by the rental component of CPI each year.
Okay. And what about, is there any limitations to the type of properties? Where can these properties be?
Well, they're in areas where the government's designated there is a need for more affordable rentals. So I guess a lot of the research has been done by the government in that before they award the licence, the developer or the NRAS provider is making an application to the government and putting a case forward for that area. There's no difference in the actual property quality. So it might be a row of townhouses, they're all built identical, but perhaps 3 out of 10 are designated into the NRAS program.
All right, so you spoke about where in terms of where the government has these designated areas, and I'd imagine they're probably good rental spots in terms of, for investors, they're probably near transport, that sort of thing?
They are near transport. I guess one of the major things we look to do is sift through, one of the criteria for us before we recommend it to a client is make sure that it would stack up as a normal investment, and then the NRAS is a bit of a bonus to it. So there's still certain areas you want to avoid. We help cut through all the chaff there. Okay,
so in terms of the long-term strategy with property, what about the capital growth implications of the property like this? Is there any sort of impacts on that? Does it work in your favour, in investors' favour? And can they also sell the property within the 10 years? Is there any limitations there?
Okay, first things there, in terms of the capital growth, if it's a well-selected property, you should still see the same capital growth as a property that's non-NRAS. The difference is because the NRAS actually will make it a positive cash flow property, you're putting money into your pocket at the end of each week, at the end of each year, which will enable you to hold the property for the long term. So you can sell it after the 10 years or you can keep holding on to it after the 10 years. But it makes sure that you're there for that 10-year cycle.
Okay.
If you do choose to sell the property, it's no problems. It does have a clear exit strategy. You can sell to another investor that either takes or does not take the NRAS allocation, or you could sell to a mum and dad that move into themselves, in which case the NRAS ceases on that property.
And just another question, can these properties be bought off the plan or they've got to be complete?
They can be off the plan and they can be complete. Again, it comes down to the personal investment strategy of the client as to which is better for them.
So in other words, if it's off the plan, you've also got the benefit of stamp duty savings, is that right?
Well, you'd get the stamp duty savings if it was any of the contracts here in Victoria. If it's a house and land package in any other state in Australia, you would only be paying stamp duty on the land component, and there would be no stamp duty on the build. Okay,
great. Nick, just one question on the NRAS properties. In terms of the tenants, you know, the whole thing sounds almost too good to be true, this NRAS property concept. I know it's not, but can you tell us, is there any risk with the type of tenants you're likely to attract seeing as a discounted rent?
Well, not really. It comes down to an income verification, and that's what allows the tenant to qualify. The property manager will do normal due diligence checks on the tenant before they go into the property. The property manager will then be conducting their annual inspections or biannual inspections, or even 4 times a year up in Queensland, and providing reports as part of their auditing process. Now, what we're finding is that the tenants have a vested interest in the property because they're getting this $50, $70, $80 a week discount on their rent that they won't get if they get evicted from that property and have to move into another property. It's another $4,000 out of their pocket. So it's giving them a vested interest in looking after the property to stay there long term.
Okay, and if they, you know, if you happen to run into a tenant that's not a great tenant, how does that work?
Well, they can get pulled up or evicted under the normal Real Estate Institute rules. Each of the property management agreements is written by the Real Estate Institute of that state.
Okay, so it's just the standard Real Estate Institute, nothing changes there.
That's correct.
Well, that sounds pretty good. Thanks, Nick.